Hello, ladies and gentlemen, and welcome to the Business Breakdown, where I'm going to give you the major business events that happened in the past week. So to start off with, I wanted to talk about the recent news. We had the election results and we had the announcement of a vaccine from Pfizer and BioNtech. So this vaccine came out and they said it was actually 90% effective in a study of 34,000 individuals. So that was huge right there. And this kind of just drove all the enthusiasm and gave people hope that there was a future for a vaccine on this, and the markets went wild starting on Monday of this past week. Something interesting that happened with this, though, is that the CEO, Albert Bourla of Pfizer, actually sold $5.6 million worth of stock, on Monday, right after this big announcement about the vaccine from his company, and then the stock hitting a 52-week high. So it was kind of odd. People were wondering what was going on there. Well, it turns out this was actually set up by a trading plan that he had instituted in February of 2020. And it just coincided with the date and time to sell it now, which is pretty good for him, selling at the all-time high or the 52-week high there. You also had news from Eli Lilly come out, and they have an emergency FDA approval on their antibody drug for people that already contracted COVID-19 to help them recover. So it's another big news for the healthcare industry there and dealing with the pandemic. So this made the Dow go up over 1,600 points on Monday. And just to look at some of the stocks that were doing well, some of the companies that were performing well and what was doing poorly, take a look at this. You had the ones doing well first. Carnival up 39%, Nordstrom up 26%, American Airlines 15%, Bank of America 14%. And then if you look at the ones that were down, so you had the ones that were up. These are the recovery companies, right? Like nobody's going to be going on cruises or flying if there's major concerns about this pandemic. But then looking at the ones going down here, you have Clorox down 11%, Zoom Video down 17%, Peloton down 20%, and Netflix down 8.6%. So you have all of those companies that were traditionally doing very well with this pandemic and have seen their stocks really multiply over the course of this crisis. They were getting really beat up now. So you can see how there's this fight here that are we going into the full recovery? Or are we going to go back into pandemic lockdown situations? And you can see that these different companies are kind of fighting for the stocks are going up or down based on that. We also had the European stock market went up after our election news. I thought that was interesting. The European Stock 600 is actually up 4% on that news right there. We also had a big company, one of the kind of the most famous investors of all time, Warren Buffett, Berkshire Hathaway company, reported earnings. Now, the company reported a jump they had earnings growth of 82% here for the third quarter, but most of that came from their investments. It wasn't coming from their baseline businesses and how they were doing. If you look at it, their overall earnings gain benefited from a rally in the stock market, which lifted the estimated value of Berkshire's investments by $24.8 billion in the quarter. So that's pretty crazy right there that they were making that much just from the investments. But the actual operating earnings in the period declined 32%. And keep in mind here that the stock is doing well also because of a lot of share buybacks. So Warren Buffett had been against buybacks of shares in the past, but they've been doing that recently. And if you look at this one, they bought back $9 billion of their own stock during the third quarter this year. If you look at the full year, that's about $16 billion that they have purchased so far of their own company's stock. Now, the company earned $18,994 a share, which is crazy when you think of that number right there. In the year earlier period, they earned $10,119 per share. So the earnings still were doing better. They have $145.7 billion in cash on the balance sheet. And what is Warren Buffett's Berkshire Hathaway's largest holding? It's Apple. Next up, we have Bloomberg really going in on this streaming channel that they're trying to develop here. So the company, Bloomberg, is known for their terminals where you can access a lot of financial information on, and people pay a subscription for that, for really detailed information if you're a trader or work at an investment group. Now they're doing this thing where they're kind of building this streaming channel around their social media brand called Quicktake. And what they want to do is kind of have general interest and lifestyle news that are hoping to bring in kind of non-finance people into their Bloomberg brand. So this is something new that they're trying to do. Another thing from the results of the election is that we have an update for cannabis stocks. So there was a lot of states that actually had on their ballots, an option to make legal marijuana or to maybe legalize medical or recreational use of it. And what happened was New Jersey, Arizona, and Montana all voted to legalize it. And also Mississippi allowed for medical use, as well as South Dakota allowing for both medical and recreational use and decriminalizing it. So you have all these places decriminalizing this drug here, and it really kicked off the cannabis stocks. You had Aurora Cannabis was up on the news, Canopy Growth Partners, Tilray, Kronos Group. I mean, all these companies did really well. But the problem was that if you look at that overall sector, it's down about 40% for the year. So they needed this bit of positive news to kind of make some of that back, but they're still not doing really well for the year. Next up, we're going into Norwegian Cruise Lines. So they announced their earnings, and they announced a quarterly loss of $2.35 a share, which was worse than the $2.25 expected. So that's not a good sign right here. But the key takeaway is that they are having a lot of people showing interest again in these cruises. We talked about this before in 2021. So particularly the second half of 2021, people are still making bookings for cruises. We don't even know if that's going to be a possibility yet. But it does show that there's potential in the future. And that's why the stock actually gapped up from 16 to 23 on this news. And a side note on this, just looking at the cruise lines and what's going on with the industry, there's a giant industry for recycling ships, for scrapping them and selling these steel and kind of making money back on that end. And a lot of the cruise ships, a lot of the cruise companies, they're actually selling these vessels. And I'm taking a look at the numbers here. You have these giant cruise ships, tankers. They said the tankers hauling iron or car carrying vessels, a lot of them are being scrapped because they don't need this extra capacity right now. So if you look at some of the numbers here, in the month of October, 557 ships were demolitioned for scrap. If you look back to 2019, they were at the numbers of 889 for a full year. So I mean, we're almost doing the full year of 2019 in 1 month here. So this makes you think back to when was this ever this bad? And the record would be back in 2012, and this is right after the financial crisis, and there's all the kind of the issues with global trade, and they were destroying a lot of these ships there as well. That one, they had a record 1,966 ships being destroyed that year. So it's kind of crazy here. And if you look at it, these Carnival Cruise Lines or Norwegian Cruise Lines or any of these companies, they can get about 20% value to sell these ships to recycling companies, 20% of their original construction costs back when they sell it for recycling. One of the bad things with this is that these ships are now piling up in areas like in Bangladesh, in India, in Izmir, Turkey. There's very specific spots where these ships are sent to be demolitioned. And if you look, there's actually, I think, a National Geographic documentary that you can see on YouTube if you search for that, just the scrapping of these ships and the industry around it. And there's a lot of kind of not safe working conditions, and they go to these countries where they don't have the same tight, health and environmental standards, and you end up having kind of a crazy story. But if you want to see that, check out the documentaries that are on YouTube for that one. I thought that was an interesting thing that we're seeing the repercussions or the ramifications from the change in global trade right now. The company Beyond Meat, have you ever tried one of their hamburgers, their heart attack burgers? Well, I guess a lot of people aren't trying it because their sales were down 11% and the stock was down double digits on that news. So yeah, it's a fake hamburger that doesn't have meat in it, which you would think would be healthier, but actually has a lot of salt, a lot of cholesterol, there's a lot of stuff in it that's not necessarily maybe the healthiest for you. Next up, we have Nikola reporting their earnings. So we had some previous videos where we discussed all the controversies surrounding Nikola. They reported $117.5 million loss here, net loss for the third quarter. The loss was only $15.5 million a year ago. So that's pretty crazy difference right there. Per share, that's a loss of 16 cents. Now, the company spent $5.2 million on legal costs, and this is dealing with the Hindenburg research report that came out and said the company was a fraud and their technology wasn't where they had proclaimed it to be. So now they're dealing with that, and on top of that, they have a lot of subpoenas now from both the SEC and the Justice Department for their CEOs and their executives at the company. Right now, they reported they still had about $908 million in cash. So they still have some money here, but once again, this company does not have products that they're selling that are marketable right now, and they are burning through a lot of cash. Next up, we have BMW. So BMW actually announced their electric SUV called the iX. And this is going to be launched in 2022. But again, these companies, they announce these EV launches and it's a year or 3 years into the future. And it's like, why not, what about tomorrow, right? So if you look at BMW, they're trying to play catch up here. Their sales in California in particular, there's more Teslas sold in California than BMW cars in general, let alone electric vehicles. So they're really trying to play catch up here and make this electric SUV. Alibaba is a major company. It's basically the Amazon of China. Well, they have this big thing in China called Singles Day where everybody goes out and buy gifts. And Alibaba did $75 billion in revenue on that day. So that was huge. It's a new record. Last year, it was only $38 billion that they made on that day. Then you compare that to Amazon. So Amazon has like these special events. They have the Prime Day and stuff like that, right? So on Prime Day, they only made $10.4 billion, whereas Alibaba made $75 billion in revenue. After this news, though, shares of Alibaba were down, and it was about down 13% for the week after this. So we're saying, like, what's going on here, right? This is the worst weekly performance since 2015. Why, right? They had good revenue on this. Is there something bigger going on here? Yes, there is. So it turns out that the Chinese government drafted new rules for companies that have a dominant market share in different industries. Basically, an anti-monopoly guideline that they're trying to set forth here. And this is the first time the Chinese government's really trying to crack down on these different kind of groups or these different companies that have a lot of power in the marketplace. And you would think traditionally, with the way their government style is there, they would like having these companies that have pretty much control of the marketplace, right? Because the government is a major investor in most of these companies. But here we had this news, and it relates to something else that was another major event, right? We talked in previous videos about the Ant Group IPO, the largest in the world. This is a $34 billion IPO that was supposed to happen. All of a sudden, the Chinese government came in and halted it, just flat out stopped it. Now we're getting more reports on this. And they're saying that it's actually Xi Jinping, the president of China, that came in and said, no, we're stopping this IPO. And the reasoning, he seems to be infuriated by Jack Ma, who has a major stake in Ant Group and Alibaba. And Jack Ma had said some things about basically the government coming in and regulating the financial technology industry. And those negative comments really kind of enraged the government officials. And now they are specifically going back at him and I guess these big companies that have monopolies, and maybe the individuals there or the companies themselves have a lot of power. So you can see how politics is playing a major game here with this, because not only with Alibaba and affecting the people that are the shareholders, but also Ant Group, because you put the largest IPO in history on hold. So it's pretty crazy there. Next up, we have Fossil, though, a watchmaker. They make the luxury brands, handbags, and a lot of different luxury goods there. So they had a third quarter profit because of e-commerce momentum and lower expenses. The shares were up like 25% on this news because nobody was expecting it, right? Like, who's buying nice watches and nice bags when they're not going out and about right now? Well, the shares were actually up, 25% on the news, but then a total of 18% up on the week. So it still did well through the week, and people are expecting that's another one of these recovery plays that did well with the vaccine news.